What's going on, fam? Welcome back. It is the FOMC Minutes Day. Didn't really plan on going live, but hey, when the spice strikes, we have definitely some Bitcoin updates. Our video we put out, our little clickbait video, not doing so hot, but we are minutes away from the FOMC minutes, minutes from the minutes. And we're going to be checking them out. Mr. Chairman Powell, unfortunately, won't be joining us. I wish he would speak during these. We've got our classic chart pulled up. Bitcoin at the top, dollar in the middle, SPX on the bottom. So we got crypto, Forex, and stocks right here. And we're going to be watching them closely as these anticipated minutes hit the market. The markets are expected to react strongly to these minutes. Absolutely. These are coming at a time when fears are rising for a spell of a market-wide sell-off. People uncomfortable in their positions, people in crypto turning bearish, and at least at the moment, we're seeing the dollar gain a little strength. Meanwhile, the Fed continues to raise rates into 2023. This will be a key market factor for sentiment. Any further indicators today for the need for continuing to raise rates will likely lead to a drop in stock, crypto, commodity values, and some strength for the dollar. Traders will be aware. At the last FOMC meeting, data did not take into account recently released job data that showed strength with very low unemployment. It also should be remembered that the crypto market continued to take positive momentum into the U.S. jobs data despite growing concerns that the Feds may pivot, or the hopes of the Feds pivot and rate cuts into 23 are nowhere near reality. The crypto ecosystem could benefit from volatility in stocks or weakness in dollar, and we only have a few minutes to go. So I hope you're ready. I have hopefully the link pulled up. We'll see if that updates right away. But while we wait, guys, smash the like and subscribe. Let me pull up this Fed release here. Hopefully it'll be on this page. I might need help finding it. We will see. I'll do my best. We're going to turn this down to the 1 minute chart as we approach the release. We do see high volatility, at least into the FOMC meetings. Maybe not quite as much into the minutes, but you never know. A lot of these have been nothing burgers. There is a poll going on right now in the chat. Please vote in that poll. I want to see your guys. I want to gauge the sentiment here. Are the notes going to be bearish? Are they going to be bullish? Or are they just going to be a giant nothing burger? I'm voting nothing burger, but I will welcome a mix-up in these markets. We'll welcome it. Let me see if I can get some music on for us. And let's get settled in. Grab your brews, roll it up, and let's get comfortable, guys. If you're here today in the chat, we got 500 viewing already. Let me know you're here. Put something in the chat. We've got just a few minutes. Nice. Almost 500 votes going on our poll. Stephane Harrison looking for the Great Reset. I don't know, man. That's maybe. We'll see. What's up, Leroy? Crypto Watchman, the White Buddha. Bullish for dollar. I wouldn't agree. Or I wouldn't disagree. Oh, wait. Buddha said nothing's ever a nothing burger. We'll see. Maybe you're right. Time will tell. What's up, Andrew C? There was a Depends truck reloading at the Air Force. Ooh. Do you guys have your diapers ready? Put on your adult diapers so you are ready for whatever is about to come. What's up, BCN Lesseps? Hello, bro. What's up, William, Lewis, Wesley, Umar, Blady, Justin, Todd, my man. Yay, reset. Yeah, whatever. Reset, Moon, Doom. I'm here for whatever, man. This channel was born in 2019. We were born into the bear market. We ain't afraid of little red candles here. We got patience. What's up, Matthew Vaughn? Thanks for taking the streams scribe-ginity. I got to come up with a different way to say that. That's a tongue twister. Taking the first subscriber spot on this stream. If you're out there and you haven't subscribed yet, join us. We're live here all the time, bringing you the cutting edge of markets, technical analysis, and of course, covering your favorite FOMC meetings. We are the OGs. We were covering these meetings years ago when no one thought they were interesting. All of a sudden, Now they seem to be the hot thing to stream. We're just trendsetters. What can we say? Here we go. We're nearing in here with just a minute and change to go. Cryptodamus with the 8,000 bear emojis. Is his prediction correct? Don't drink urine. This is not urine. It's green tea. I wouldn't drink urine, man. Send us some diapers. Maybe we'll do a diaper giveaway. We'll find out. If everything craps the bed, we'll do a diaper giveaway. Send somebody $100 in diapers. What's up, Mohad? If it dumps, it will pump. If it pumps, we going down. Spooky. Spooky. You could be right. You think Bitcoin will see a bounce with the meeting minutes, says Andrew C. Interesting. Todd Stadler. Very strange things happening. Here we go. We're closing in on the final 60 seconds till these are released. This is your last moments to smash the likes and subscribes before it gets real. Shout out to our sponsors, Bybit and Market Cypher. Check out the links in the video description below. Use them to sign up for the greatest in crypto exchanges, tools, etc., and help support the stream. There's a reason we've never shilled S coins. I've given up millions of dollars, passed on millions of dollars not to, because we're not for sale. Here we go. 42 seconds. What's up, Crypto Anon Andy C? You're doing a great job. Thank you, guy without a name. I appreciate you. VOA Fuck Rule, my man. How you doing, Fuck Rule? I see you, brother. Yogita, NBF Forum, Jace, Justin, Rudy, Andrew, Kim, Bean Juice, Jimmy, Both, Andrew S, Pump. I don't know, man. Things aren't looking so pumpy right now, but these minutes could be the wild card. With 15 seconds to go, the countdown is getting real. Getting real. If you could, try to Google as well. Try to get the Googling as well. Because I don't know if I'm going to be able to find these right away. I do have the Fed site pulled up. There it is. They are released. Let's pull up the Fed site. Let's see. This is December. That's not super helpful. Did anybody find it? If you find a good link, put it in the Discord. Jump in the Discord if you're not. Let me see. Federal Reserve press releases. Homepage. 22nd minutes. Here we go, baby. Here we go. Can be viewed on the board site. Press conference. Statement. Implementation notes. Statement on longer run goals. Why is this so difficult to find? For release at 2 p.m. It is 2 p.m. East. Release the Kraken. Fed, release it. Minutes. Maybe this is it. January 1st, February 1st. All right. Let's see. Let's dive into this. So there's no possible way we're going to be able to read this all live. So I have an idea. I'm going to see if I can I copy and paste all of this? Maybe if I copy and paste it. I have a really sinister idea, guys. If you find a good write-up, if you find anything we might be able to dissect here, please put it in the Discord so we can do it together. Right. Let's see. Ah, it's too long. Son of a bee. All right. Hold on. What are you thinking in chat? If you find any good articles, you find anything good dissecting it, let me know. I have the let's call them the little magic elves working on it right now. We got the dollar moving up into this release. Bitcoin looking heavy on the 1 minute. This is the 1 minute. Please don't freak out. Stocks and Bitcoin seen a little downside with the dollar moving up. And I'm having some issues, right? Some rates. Some of a bitch. It's always hard. It's always hard to dissect these big things because there's so much that comes out at once. Primary credit rate, just browsing through here. We're gonna have to go off. We're gonna have to go off what the charts are saying instead of maybe the notes quite for now. Let me see if this works. It's not working. Let's try to do something real sneaky. Let's pull up the chat. What are you guys thinking? We're seeing some strength on the dollar, a little bit of weakness on stocks and Bitcoin. Bearish it seems. 25 BPS says Chris. I don't know if 25 BPS is really what they're going to be writing here. It should be a summary basically of the last FOMC meeting. Why they wait a month to release these, I have no idea. Maybe if I do this. I hear more subscribers. We will shout you out soon. Let's see if our news wrote anything here. Doesn't actually seem like it just now. No. Let's go to investing.com. News latest. What do we got? 7 minutes ago. 1 minute ago. So these notes are very lengthy. Literally pages and pages and pages of them. And so to expect maybe an instant article to come out is a little unlikely, but I'm doing something right now behind the scenes, and I'm hoping this works. I'll share my secrets with you guys when I'm done. Taking longer than I wanted to. Why are these so long? They say nothing during the FOMC meeting. And then they have 800 pages of notes. Like, what? Okay. Here we go. This is going to be too long. Let's just read a little bit of it. I don't see anything yet. I mean, it's going to take people time to unpack this. It's not going to be like a interest rate decision where it's like a one line, this is what happened. Not seeing much. I'm going to take this off the screen. Let's go back to the charts. In a twist of fate, it looks like on the 1 minute chart, guys, the Bitcoin chart and stocks moving back to where they opened during these minutes. Bitcoin showing a little bit more strength here, at least very, very zoomed in. A little bit more strength as we have broken higher than, I'll say, when the moment these notes came out. The dollar now below, stocks right about at parity from where these minutes were published. 5 minutes in, we have a 5 minute candle to look at. We are going to move to higher time frames as this continues. There we go. Not a lot of volatility. I'll take this, 0.5% candle on Bitcoin in 5 minutes. Not the end of the world. ChatGPT will help. So I was trying to be real sneaky and do this behind the scenes, but it's way too long for ChatGPT to even look at. Profit Taker says FOMC minutes. Participants said job market very tight, says labor demand outstripping available supply. That's not great. Where did you find that, Profit Taker? That's not a great take. That's not what the Fed wants to hear to slow down rates, unfortunately. We're not seeing strength in the dollar off this yet. I think probably, again, going to take some time to digest. If anybody, Command F search BPS, that's actually pretty intelligent. That's pretty dang smart. Let me just give that a try. All right. PDF is shorter. Haha. Thank you. Thank you, people in. Wait, that's not a PDF. Thank you, Jerry San. The Federal Reserve press release. Well, this is only 4 pages. Let's give it a little read. Recent indicators. I'll pull this close to the side so we can see markets too. Recent indicators point to modest job growth in spending and production. Jobs have been robust in recent months, and the unemployment rate has remained low. Inflation eased somewhat, but remains elevated. Russia's war against Ukraine is causing tremendous human and economic hardship and is contributing to elevated global uncertainty. The committee is highly attentive to inflation risks. The committee seeks to achieve maximum employment and inflation at the rate of 2% in the long run. In support of these goals, the committee decided to raise the target rate of the federal funds rate to 4.5 to 4 to 3/4%. Yes, that was the 25 BPS. The committee anticipates that ongoing increases targeting... This is the killer. The committee anticipates that ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return to the 2% over time. Is that just a nothing burger sentence? I guess what they're saying is they anticipate more rate hikes. That's my take. What do you guys think in the chat? Let me know. In determining the extent of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities as described in its previously announced plans. The committee is strongly committed 2%. In assuring the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee will or would be prepared to adjust the stance of monetary policy if appropriate risks emerge. Nothing so far could impede the attainment of the committee's growth. The committee assessments will take into account a wide range of information. You know this. Voting. Okay, we don't care about the voting. Decisions regarding monetary policy implementation. The Board of Governors of the Federal Reserve System voted unanimously to raise interest rate paid on reserve balances to 4.65% effective January 2nd. As a policy decision, authorized direct open market desk, still instructed otherwise, effective February 2nd. Committee directs the desk to undertake open market operations as necessary to repetition. I'm getting tongue-tied. Searching for BPS, it's interesting that we don't see anything, at least on this. It looks like they were all in approval of the 25 BPS. I don't know, guys. Nothing burger, something burger. Is there anything I'm missing? I see some notes here. Thank you again, Jerry. Almost all the Fed officials backed 25 BPS at the last meeting. A few officials favored or could have backed a 50 BPS hike. I'm going to say this is hawkish. I'm going to go on this is hawkish. What do you guys think? I put bearish, bullish, just for the reminder. Bearish, typically we're going to refer to as hawkish. Bullish, we're going to refer to as dovish. I'm thinking that's a little hawkish. All of them in agreement and some kind of saying that's not even enough. I think that this is reasonable to assume that they plan at least a 25 BPS hike into the next meeting in March. And thank you again, Jerry M., my man. I appreciate you. A little, that was a big help. ChatGPT, I wish. It was too big. I could try to put that whole thing in there. But I think I just read almost the entirety of it. And there was like nothing. The only thing that stands out to me was that all of the participants backed the 25 BPS hike. All of them. That's not so dovish. Let me see if ChatGPT can do anything for this. Is it too long? Nope. Not too long. We're having a summary cook-up right now. Let's take a look at kind of just what's going on in the day. Bitcoin, we will cover a little bit here after we ride the waves of volatility that we're going to hopefully see here. S&P closed down 2.3% yesterday, holding that 4,000 line up. Oh, wait, no, 2% up, just 0.33% today. The dollar closed up yesterday, 0.28, now up 0.19. Not a lot of change there. Bitcoin really being the one that's rough. 1.5% yesterday, now down 2.3%. I am going to open up this chart. I don't want to say I owe you guys, not an explanation, but an update. I do owe you guys an update. This is my job. So we were looking at this pattern on Bitcoin with a flat top at 25-ish. Essentially, if you watch the video, to keep this pattern valid, price needed to stay above its swing low, which it did not. 23.8. Pretty rough stuff. The ascending top, or the flat top, you can call it ascending triangle, I like flat top better, is broken. This pattern's out of the books. It's off the table. But this doesn't necessarily mean anything. I will say it leans bearish that it did. It was a very beautiful bullish pattern. You can see sometime last night, it broke below its ascending trend here. Basically back tested as resistance. We haven't quite gotten that yet. It has traded below its previous swing low, and now it's kind of hanging out here. This looks like a weak bounce to me. Most of this bounce looks like it was off that publish. Yep. Looking down below, 23.3 was a pretty important value. I'm not positive this is going to be a support that really holds or gives us meaningful upside, but it is something I may look to play a scalp long at. Our Daily TK and KJ, we looked at this last stream, overlapping at 23.3. Likely some kind of bounce here, even if that bounce doesn't really make it anywhere. Maybe like a 0.5 retrace, maybe a 618, and that could bring us down into the daily cloud support. And we just basically got to pray 21,865 holds. I will go over the little bearish scenario as well. This can be constructed very easily just using your high trend and your low trend here. This to me looks like a broadening wedge. Basically what we would need to fulfill this is we already have multiple touches on top, essentially coming back down, and 21.8 looking pretty juicy there as a horizontal right on that ascending trend. A touch to the bottom here would then, I'd say, validate a broadening wedge top, which is not a great pattern. In fact, pretty bearish pattern. Typically we would expect these to resolve to the downside. Why does that look so strange? To the downside. And we can look below us for support. We could say our 618 sitting just below 20,000 at 19.3. Not a bad spot to be eyeing. Or I think more confidently, our swing high here in December before our higher low takeoff, 18.3 sitting down here with our very deep retrace. These would be the two logical levels I would look for if 21.3 is taken out. Boom. Kaboom. Just like that. Just like that. So there's the bearish take. I think you get some serious downside targets once you break 21.3, or if you break 21.3. Using our Fibonacci extension, we see our 1618 sitting right there at the golden pocket retrace, and our 2 measured move at 18K. That's how I see the chart right now. I'm not sure which direction it's going to go. If it does break below 21.3, I think it's looking very bearish. The reason I say that is essentially we're going to see a lower low off of a test of the 200 weekly. I'm really hoping that doesn't happen. But we don't know. I don't know, man. I don't know. Check back in on the low time frames. Dollar showing more strength. Boo. Boo. Dollar retrace those gains, now breaking to, looks like a session high here at 104. Oh, yeah. I hear subscribers. Just give me one sec. Stocks down from the publish's open. I think this is very clearly the market's reacting to not really what they wanted to hear. Markets were probably hoping that there was some dissent, some kind of disagreement, at least someone saying that interest rate increases aren't going to solve the problem. Didn't happen with all FOMC members voting for the 25 BPS hike. I think that's going to go down in the books as hawkish. It's looking hawkish. More subscribers, Here we go. Let's give these a little time to mature. We've seen them move in one direction and reverse already in just 15 minutes. And now we're seeing them back to basically their opens, except for the dollar showing strength off of the unanimous decision. Let's take a peek here. Pieter Weijin subscribed. Fabio Pisco. Gamora Sick. Elio. Ben Velikovic. Chris Ekaprutra. Man, I'm having trouble doing names today. Ardell. Or these are just hard names. Ardell Wilson. Nico. Who else? Alan Martins. Ivan R. A name in Russian I can't pronounce. Troy. Matthew Vaughn. Nicholas. Brendan Herring. All subscribed during this live. Right on. Right on. Welcome to our fam, guys. We're here almost daily giving you the most up-to-date market analysis, research, chat, doodles. We got all the best stuff. If you're new here, smash the subscribe button. Join us. We're racing Bitcoin to 100K. Make sure you're smashing the like buttons, engaging with the live stream. The more engagement we get, the more YouTube shows it to new eyes, and that's how we grow. It's not placebo. You guys are the best. You the best. Let's see what you're saying. I'm going to refresh the chat again because it froze. Chairman Powell will speak again, Crypto 101. Chairman Powell will speak in March, and we will be live here for show. We'll be live for show covering that. A name in a language I can't identify. I don't know how to shout you out, man, but I'm going to at you. and copy and paste your name, and then I'm gonna send you a wave in chat just so you know that we didn't miss you. What up, John O'Donnell? O'Dendal. What's up, man? Yoda Best. I don't know. Maybe. John Doe. Would you consider yourself a Chad? Nah, man. Nah. When Gina now. Crypto Sharknado looking to short markets at 103.69. That's quite below price right now. Short when dollar goes down? Expand, Mr. Sharknado. The most deadly of tornadoes known to man, the Sharknado. The shark. Here we go. Bitcoin on top, dollar in the middle, stocks on the bottom. Kind of surprisingly similar looking charts. Gina Meow. Frank Scola. What's up, Priyanish? How you doing, man? Gold analysis, please. I do have gold pulled up. Maybe we should look at gold. You can look at gold. Colby. We miss Gina. I miss Gina, man. Dixie, new all-time high wire live. The dollar would have to go up about 50. No. We'd have to go up more than 50% for new all-time high. Hasn't been done since like 1960. I don't know if that's going to happen, but I wouldn't be surprised to see it run a little bit here. Hawkish is bullish for USD, correct, Bia. Vern Malo, what up, man? Dean, my man. Peace was never an option. Where would I put a stop loss, Chris? That's very vague. Hopefully above my entry or below my entry. It depends. Didn't know. You're long, you're short. Don't know. Leverage, don't know. Asset, don't know. The answer is yes. What's up, Israeli Fernandez? Great content. Thank you, man. We're just covering the boring stuff. We're going to take a look at gold here in a second. I have gold on deck. Just seeing what you guys are thinking. I think we can say that this was hawkish. The dollar hitting a session high just minutes after. Stocks hitting a lower low on the day. Weirdly, Bitcoin not hitting a lower low there. I don't know. Bitcoin kind of maybe deciding what it wants to do. Figuring it out. I don't know. Pow 420. Do we have 420 likes? Let's get it. It's too early for the short newbies, says Fuma. Almost time, though. Get the top of the bounce. Yeah. I mean, we broke the structure. Not looking so hot. Where might I look? We aren't far. I'll tell you what. I want to look at gold next. I want to look at gold quick, and then I want to do in-depth on the corn. See just how bad the damage is from this. Crypto Lee, please shout out my main man, Nicholas, for trying to get him involved in crypto. Nicholas, if you're out there, be a Chad, bro. Be a Chad. Join us. Hawkish AF, I'd agree. There's no dove in those minutes. Recession canceled. I don't know. We're already in one, aren't we? Look at Cypher. Will do. I will. Short squeeze. That'd be cool. Ravage the like button. Frank's right. What's up? Doesn't matter. I have your pickle. Give me my pickle bag. What's up, Todd McAfee? VOA. You have a profound affinity for trains. Those are very in-depth words. Thank you for sharing. What's up, Ryan Cox? You the man. Mohammed Al-Safadi. Welcome. And Fern Malo. Along with Kim Amundsen. Duzen Dizar. Greer Hire. Dangerous Fox. Crisis Renegade. And Terry Wilson. Everybody manning up here at the time. We got 1,500 viewers. We're rhyming. We're rolling. We got 450 likes. Guys, we have 1,500 viewers. Let's get 1,500 likes right now. The more likes we get, the more YouTube shows us to more people. We got to get the engagement. So let's peek in on gold. Gold has been on our radar, I want to say, for a few weeks now, really in February. We saw a very strong run up into November, December, January. Trading from 1620 lows up to 1950. I was getting a little bullish on gold there too. I was like, man, gold looks like it wants to go 2K this year. Still kind of think that here. My take on gold is pretty simple. Let me get rid of this. So I'll get rid of this too. Gold on the monthly right here. Obviously, we have a battle to pick up here at 1928, our monthly close in January. And what I'm eyeing, honestly, I don't care what happens. I'm waiting for this monthly to close. We can see that in the last few days, gold did sell off and it did trade below its monthly open at 1820. Closing a candle below there is going to be pretty gross. I don't think gold has had many bearish engulfed monthlies without a continuation. Last time that happened, and right now I'm going to reiterate, we're $5 on an $1,800 asset away. And we have 6 days to go. Definitely could close above, definitely could close below. Last time gold had a bearish engulfed monthly was in March of 22 when it saw 1, 2, 3, 4, 5, 6, 7 months of red before bullish engulfing back in November. The rest is history. Gold in a tight spot. I think right here is maybe the most similar looking monthly candles, and this is May of 21 into June of 21. We saw that bearish engulf on the month, and actually not a lot happened. We had a weak rebound, so if we see that happen into March, which by all means is probably likely a weak rebound if it closes down there. If we see a weak rebound in March on gold, let's see, 382, might look something like this, like 1870. If we see March's candle come in, find resistance around 1870, maybe as high as 1880, we might be looking for a lower low in the future, and that's likely to spell out some strength for the dollar. That would line up pretty well with what we just saw in these minutes. I do want to comment that it is surprising that all members of the FOMC were in agreement on the 25 BPS. Some wanted higher. That is hawkish. It's surprising that there's such unanimity. However, this isn't really that crazy for the market if you like put it in perspective of what we've seen over the last few months. I'm not sure anyone was convinced that the rate hikes were done. Was anyone? Like, we hoped maybe, but we hadn't seen the rhetoric cool down. They haven't said really anything like, we think the rate is at the rate it needs to be. They basically have just come out over and over and over again and said, like, it's not, and we're going to continue doing what we need to do. I mean, sometimes we don't really take them seriously because this is coming from the privately owned non-governmental body that controls the U.S. monetary supply that told us that inflation was transitory. So they can be a little hard to trust at times, but they have been pretty steadfast with what they say versus what they do. They have not really mixed it up on the market. That's their job, and it's good to see them actually respecting that job. What the markets don't want is mix-ups. They don't want the Fed to say, we're going to keep raising rates and then not. They don't want the Fed to say, we're not going to raise rates and then do. Those are the things that can make markets turn upside down very quickly. That forward guidance tool, when it falters, is absolutely brutal for markets. Markets don't care as much, I'll say, about hawkish, dovish monetary policy as they do the level of certainty that they can achieve. The more certain they can be, even if that's to the downside, the more comfortable they are in investing, and I'll say the better for markets in general. Uncertainty, like in March of 2020 that we saw, complete black swan, out of right field, no one expected it. That is what can cause, I'll say, capitulation collapses in markets. I'm not sure we're on that vibe yet, but we will see. We will see. What's up, Dashiel Rodriguez? Tom is the man. Dashiel is the man. Jimmy, Tom, do you have any insight into the new same-day option trading that was implemented? Insight into the new same-day options. Where was it implemented? I'm not sure what that is. Fern Malo, can't trust forward guidance. I would agree. Honestly, I would agree. My faith in that was lost with the whole inflation recession talk. But that doesn't mean, even if we can't depend on it, we can't, doesn't mean that it won't have impacts on markets when it's mixed up, when we get curveballs. That's my take. Every day is a storm in crypto, Alex Wells. Beautifully put, my friend. Beautifully put. VZ Fat Cat 13. 1 year of holding and buying all the way down. You're a holder, not a trader. So you got into it on BitBoy. I mean, I love Ben. I love Ben. If you guys met Ben, you'd love Ben too. You know what, man? I'm happy to hear that. When I started in crypto, there was a lot of that holder long-term view. It seems to have kind of gone by the roadside lately with people really chasing moon and Lambos, but that's how I started. I DCA'd I DCA'd up, I DCA'd down, and I made a rule. Maybe this can help you guys out there. If you're in that position, still building a position or a portfolio, I made a rule for myself that I would not make. So I did DCA, but I didn't do it by time. I did it by value. I made a rule for myself that when I bought, I would only ever buy again if price went X amount lower. And so I think I was doing like 10% lower. I think that is a really clever way to DCA. It definitely has to be in an asset that you believe in. So I wouldn't do that with anything but Bitcoin personally, but my opinions don't have to be yours. But what that does is when you're DCAing, you're going to run into times, maybe even looking back, we can say January of this year, when price gets really exciting, runs up, and you think that, oh no, I'm not going to have like these prices anymore. I'm going to dump all my money in. Well, the problem is bear markets are full of bounces. Typically, they weren't last year. But you will end up succumbing to those like emotions of I'm going to miss it. I need to get these prices now. And then what happens is you throw your money in, it drops, and now you're out of capital to DCA when it does go lower. So I do recommend, guys, not financial advice. This is how I was successful. Didn't feel like it for years, but this is how I became successful over time, was by never buying higher than I did before. I did maybe 10%. That number is totally made up. Like you could do 50, you could do whatever. You could even say I'll buy at the same level or slightly, 1% lower. The whole point of it is if you can avoid it, you don't want to be chasing price back up when you're DCAing. If you can avoid it, it's not always avoidable, but that's my take. That's my rant.